Welcome to Mines and Money's Online Connect pitch battle for North America and Europe, where finding gold isn't the goal, finding funding is. My name is Lindsay Milchuk, your guest host from Appalachian Media, a company that doesn't just finance, but also pulls that curtain back from the pitch deck and tells your story through the ears and eyes of an investor. And for the next 30 minutes, you all are stuck with me to guide you through adventures and wonders of the great presenters. So be prepared for a roller coaster of unknowns only for the wildest thrill seekers. Buckle up, let's get started. And before we begin, let's introduce our fierce judges. Our first judge is Gervais Williams, head of equities at Premier Milton Group. Gervais has spent decades identifying great investment opportunities, which means he's professionally trained to ask exactly the questions every pitcher is hoping he won't. Next, we have Miranda. Miranda, how do I say your last name properly?
Werstiak.
Miranda Werstiak, Chief Revenue Officer of Monetary Metals. She works at the intersection of precious metals and finance. So if anyone here can tell the difference between a shiny idea and a golden opportunity, it's going to be Miranda. And finally, Alain Corbani, Portfolio Manager and Head of Mining at Mont Bleu Finance. Alain spends the days assessing mining investments around the world. So impressing him today is a bit like trying to surprise a geologist with its own rocks. So here's the name of the game. Each presenter, come on, and they give a 3-minute delivery of their pitch, we'll say, after which our judges will have about 3 to 5 minutes to put their questions to the presenters. Now, I'll be the one waving the checkered flag when time is up. At the end, the judges will deliberate their final verdicts. Let's get started. Kicking us off this round is Michael Mouchard, President and CEO of RPX Gold, formerly known as Red Pine Exploration. Now, Michael, the stage is all yours. I'll jump on at the 20-second mark to give you a heads up to wrap it up.
Great. Thanks, Lindsay, and thanks for the opportunity to be here today. I'm very excited. I know we have a very worthy project for the pitch battle. It's a gold development project, northwestern Ontario. You see on the map here where we're located. It's like real estate. Location is everything. What this provides is an opportunity for staged low-risk gold production in Ontario. The reason for that, we have a large resource, comes right to surface, right beside the town of Wawa, and we're in the best neighborhood in town. You can see Alamos Gold beside us, West Dome Gold Mines, Hemlo Mining Company, and Vault Minerals. What this provides us is a couple things. Infrastructure, which is critically important because we need that infrastructure to develop some small open pits, which we will use toll milling, using up some of that excess milling capacity in the region, which therefore generates cash flow, which we can then turn back into the operation, develop a larger underground mine, also do exploration without diluting the shareholders. So this is what really sprung this idea. How do we raise money? Do all the work in this great environment without diluting shareholders. And these mines have been operating here for more than 50 years. They're currently mining at levels at about 1.5 kilometers deep. Our property, 1.7 million ounces, only drilled down to 300 meters. We've done a couple of drilled holes beyond that. We know the deposits go at depth. We really just want to get down there and do that drilling. And this approach of going into production, small scale production, 50,000 ounces a year, generating $75 million a year that we can use for the drilling and development of a much larger project. So that's really where that came from. And how do we get that done? It's infrastructure, as you can see, excess toll milling capacity, highways, power, all right there. This is a property that we've been working on off and on mining here since the 1890s. We have the closure plan. We have existing permits in on leasehold patented lands where we don't need to require a lot of permits. So permitting time is very fast. And funding to get this started, only $51 million. So low capex, low risk, even for a junior company like ours. It's really how we're going forward. The plan is to start with some small open pits, and then we go underground. And you can see the results here from our PEA study, $500 million NAV, $100 million, 100% rate of return. That's really what's driving this. We're here to make money. We're driving this forward in this way. We're currently trading at only 10% of NAV. That's the investment opportunity. we have 2 research analysts, $1.60 on the stock. We're trading at 13.5 cents. Why are we so low? Why is this such a good opportunity? People just don't know the story. We dropped our PEA in March, and now we're out telling the story. We're getting really good reception, and we expect that the share price as we move through the year with Catalyst, signing up a toll milling contract, getting our IBA negotiations, getting our permitting done, and our PFS, which is expected early next year in production within 1 year. So next summer, producing gold, making money, and taking advantage of this high gold price.
Amazing, Michael. Great presentation. I'm going to throw this over to the judges. And you know what, Olivia, let's see. Yeah, Miranda, actually, let's start with you with any questions that you may have.
Yeah, thanks, Mike. Actually, it's funny. I know this project from its very early days, and I've actually been up to Wawa many years ago, before you stepped in. A couple questions. You've got your PEA, and you said PFS. Now, we all know the timeline from economics to production generally shifts to the right. $51 million capex. What's your plan, right? If you're saying you're going to be in production in a year from now, that's a pretty aggressive timeline. Can you just walk us through sort of the method to the madness, for lack of a better word?
Yeah, and we have a very detailed plan to get into production in a year. Really, we needed the money. We financed about a month ago. We financed $14 million. That's going to take us through the PFS. So that requires about 20,000 meters of drilling, which we're about a quarter of the way through already. That drilling was really done to convert inferred into indicated, but more importantly for metallurgical samples, geotech samples, metallurgy, environment samples. So we're doing that work now. We've already submitted our application for permits to the Ontario government. We've had the initial kickoff meetings, and that's going well. The IBA negotiations, we've had 3 groups that we've had on the exploration stage. We have good relationship. Now we're converting some of those exploration agreements to IBAs. In fact, we hope to have the terms done later this fall. So the way the timing works, we hope to nail down the MOU with a toll mill within the next 2 to 3 months. We're preparing the samples to send them. Now that the PA is done, we know what kind of material we're going to be sending, the grade, and we're sending more samples to them so they can do their own bench scale tests. So we should be able to nail that agreement down within the 3 months. The IBA, we expect to have terms by September, final ratification by year end. The PFS, we said first half of 2027. I'm hoping that sort of a stretch goal for us would be the end of the first quarter, and we would have our PFS completed. And the permitting in Ontario, now they have this stage permitting program, which helps a lot. So even as we're waiting until mid-year to get the permit for final mining, we can get this phased permitting so we can actually get a permit to remove the trees, the overburden, putting in shops and roads before that timeline. So we'll be working on that throughout the year. And that's how we're going to achieve this, is really through this phased permitting timeline. Once we make a production decision, when the PFS is done, then we will have to raise the $51 million that was outlined in the PEA for the capital injection to start some of the actual mining part of the project.
Gervais, why don't we throw this over to you? Do you have any questions?
Yeah, I tend to really like actually pilot production. I think that's a great idea. You get a better understanding of the ore body. You get a better understanding of the recovery rates. I'd be interested to know the assumptions you're making about the recovery rates. I mean, it'll be quite a wide range at this stage. You don't know how well you're going to get on with that, and talk a little bit about how you might optimize that recovery rate when you get to early production.
So we have a sort of 88%. But 90% of the deposit is very gold, coarse gold and quartz veins. Comes out nicely. It's probably about 90, close to 95%. And then we have about 10% of the deposit that has, because it's an intrusive, has some original intrusive-related gold, which is related to arsenopyrite. That arsenopyrite, even though it's not refractory, it has very fine gold in it. It's hard to recover. So about 10% of the deposit has that. When it's blended together, we assume that we send it all to the toll mill in the PEA. I think where we have the opportunity, we've done a lot of mineralogy now and SEM work, and we've done that work to separate where those areas are. So I think in a toll milling scenario, how we would probably do that is hold back some of that material to ensure that we get the higher recovery material going to the toll mill all the time, because we are shipping it a farther distance. Then we can decide later if we ever do have our own mill, or a mill that's closer, or maybe a flotation mill comes available, then that might be better suited for that particular ore type. A separate stream could go to that mill. For instance, that Hart Gold Mill is flotation. It's currently owned by Vault Minerals. A portion of the feed could go there to improve the recovery, because it'll be over 90% for a sulfide con, which then would have to go to hydromet or to smelting somewhere. But it's that 90% of the really high recovery material is what we really see as sending to the toll mill first. And now we have a good understanding of where it is in deposits, and separate it into blobs that we could easily separate in a mining scenario. So it's not all intermixed together. We know where these areas are.
So in fact, and it's quite interesting. So you can actually do quite a lot of ore sorting, really. It's the ore sorting that's going to give you the high grading.
Yeah, that's right. And we're investigating some of the ore sorting right now, because it is a toll milling scenario. We do have a capital cost crushing it down on site and putting it through a sampling tower, so we know exactly the tonnage and grade that would go to a toll mill. That gives us an opportunity, because it's going to be crushed down to something around an inch in size to go through an ore sorter. So we have some samples out doing that analysis right now.
Great.
Let's throw this over to Alain. You can finish us off with Michael. Here, what is the question you have for him?
Thank you, Lindsay. Unlike Miranda and Gervais, I'm not familiar at all with the company, but can you? I'm very surprised by the capex, low capex. You talked about toll milling. I understand it. So let's get back to the 1.7 million ounces that you have. Can you briefly tell us the history of this deposit? I know that Alamos is a shareholder of the company. Was it an asset that was owned by Alamos?
It was owned by a company. It was a joint venture between Red Pine Exploration and Citadel Gold Mine. The Citadel Gold Mines actually mined the deposit in the 1980s. And, what they were really looking at was mining something high grade, over 10 grams per ton, with a cutoff around 5 or 6 grams per ton. And really, what we're not chasing high grade quartz veins in this deposit. These quartz veins occur over within a shear zone that's 10 meters wide, trends for 6 kilometers. We're really looking at an area that's 2.5 kilometers long, 10 meters thick, and mining out that from hanging wall to footwall, thereby reducing the risk. We're not trying to chase any very irregular quartz veins. That's what generates the tonnage. That's what generates the economies of scale. We're really looking at an average grade of 4 grams per ton. And, coming right to surface, and in these gold prices, it certainly is, very high margin ore, even enough that to the point where it can cover the cost of the toll milling and the shipment down the road. I mean, we looked at this initially when gold was 2,200, and it made sense for these small pits. Now the gold's over 4,000, so we're just following the same plan essentially. And the small pits do generate a lot of income in the order of, free cash flow of $70 million or more than $70 million per year. And we can do that for 3 or 4 years and then really decide what's the next step. There is a large pit there. There is a large underground. What's the next step? We don't have to decide today. Let's mine for a few years, get money in the bank, and then really say, hey, that's where we want to go. That's what we want to put our money into. But just getting started is key here.
So the PEA, you mentioned 67,000 ounces per year. Over how many years?
9 years. 9 years.
9 years. Okay.
Yeah.
I'm still very, very intrigued by the capex, the very low capex. Very.
Yeah.
All right, Alain, you keep that in mind for in your pocket as your little weapon there. We're going to wrap this up with Michael, and we're going to move on to our next presenter, Julien Davy, CEO of Acadia Silver Exploration. As I mentioned previously, Julien, I will come on the screen at probably about the 20-second mark just to prompt you that your time is almost up. So the screen is all yours.
Thank you very much, Lindsay, and thank you for giving us a chance to participate in this fun challenge. So I'm the CEO of Silver Acadia, and I will start with a simple observation. today in mining, some of the biggest discovery don't happen because someone finds a completely new project. They more likely happen because someone looks at an existing project, but differently. And that's exactly what is happening with our flagship project in New Brunswick, where we are. It's the Nicolas Denis project. For decades, it was explored with a priority on zinc. We are in the famous VMS Bathurst Mining Camp, New Brunswick. They had mills, smelter, all fine-tuned to produce mostly zinc and lead. Other commodities exist, yes, but it was considered as byproducts. On our Nicolas Denis project, hundreds of drill holes were completed, resources were estimated, and there were a tremendous amount of work that was done with the same zinc focus. When I joined Silver Acadia a year ago, we asked one simple question: why are there so many exceptional silver and gold intercepts throughout the property, yet no one has really explored it as a silver and gold system? That question changed our entire exploration strategy. Instead of looking at isolated occurrences, we began to look for a district-scale precious metal system. Today, Silver Acadia controls more than 250 square kilometers in the famous Bathurst Mining Camp, with the focus on Nicolas Denis, a project that already contained, as you can see here on the screen, a lot of data. Our job was to make that data speak. If we zoom in a little bit in that red area, we see that we use a lot of modern geological tools and interpretation, and we recognize a multiple high-grade silver that multiple high-grade silver and gold zones could be connected together, and they were all along the same mineralized corridor extending on a minimum of 3 kilometers. And more importantly, there aren't isolated high-grade veins. There are broad mineralized envelope containing high-grade ore shoots, the kind of geometry we hope to see. The first drill program we did in the last winter, validate that first concept. We intercept grades like 328 grams per ton silver over 25 meters with some gold also. So today we have a market capitalization of approximately 15 million. We are well funded. Additional assay results are pending, and we are preparing phase 2 drilling with the objective that is clear for us: demonstrate that the Nicolas Denis is not a collection of isolated showings, but a connected district scale silver and gold system. And if we are right, if we are able to demonstrate that, we won't have discovered a new district, but recognize the true potential of an overlooked one. Thank you very much.
Wow, well done. I mean, you had it down to like the very last second, so good for you. I'm going to throw this over to the judges now. Ellen, we'll start with you on this one.
Oh, this one is, it's a tough one. So can you tell us a little bit more about your background and why you joined this company?
Yeah, thank you for asking that. By training, I'm a geologist with an MBA, and I working in exploration, mineral exploration since 1998. I've completed a master's degree in the Quebec Appalachian region, actually, and that is really relevant because we are talking about the same rocks here. 15 years ago, I had the opportunity to work with a Quebec-based investment fund, and that allows me to give me more exposure on the capital markets and on the strategic financing itself. And what attracts me to Silver Acadia, I would say two major aspects. The first, that I recognize the geological potential. It was familiar for me. And the second aspect is the fact that Silver Acadia has a shareholder base which is largely composed of long-term and committed investors.
Perfect. Okay, we're going to move on. Miranda, the mic is all yours.
Thank you, Julien. Nice to see you again.
Nice to see you too.
Yeah, this is really interesting because, from our coming at it from sort of the nexus of precious metals financing, with investors with precious metals, we're keen on silver, right, and the associated sort of polymetallic systems. You said you're well funded. What cash do you have on hand? What capital, and what's the plan for the next 9-12 months to you talked about an exploration project, drive exploration.
Yes, so we still have over 2 million in the bank. It's enough to do what we have, what we are ongoing right now. It's the field. We have a field program with several geologists on the ground. We need to validate more, to cover more surface right now, and everything is to prepare phase 2. Phase 2 drilling will be between 10 and 15,000 meters of drilling, with the idea of doing some infill drilling to demonstrate that we have that minimum of 100 grams per ton silver halo, broad and wide mineralized zone with higher grades ore shoots in it. So we're going to do an infill program probably with 150 meter spacing lines, covering that 3 kilometer. So this is not going to be enough, 2 million, of course, we know that, but we are backed by really interesting shareholders that are already willing to finance us on the next round.
All right. Gervais, we were going to take it home for us.
Yeah, I was going to ask because this area has been worked quite a lot. Do you have access to certain sort of shafts and things which give you better understanding of the geology?
That is part of the really interesting things in New Brunswick. When you are working on a project and you quit that project, it is required by the government that you give all the core and all the information. So we have access to over 50,000 meters of historical core physically. And we did a lot of core scanning, for example, last year. So that gives us a lot of information that wasn't in the log or wasn't even logged at all. For example, we have areas that are in the mineralized zone but are not assay for silver and gold. They were only focusing on zinc and lead at the time, and because we are on the margin of on the edge of the north edge of the Bathurst Mining Camp, the zinc grade wasn't so hot as the one in the heart of the Bathurst Mining Camp. So they were considered this project as marginal. But if you look at the other project, the other commodities with silver and gold, we could see that we have a little bit different type of geology to it. It's an epithermal system instead of VMS system. So that's why we have high grade silver numbers above 1,000 grams per ton. And they are accessible. They are still accessible within that historical core that we have.
Can you see them as separate bands within rock, or are they similar in terms of color and friability with the other rock?
Could you please ask this question again? Sorry.
So what I'm asking is, how different is the high grade silver? Does it look different? Are there factors about it which make it easy for you to identify?
It looks different, definitely. It is. We know that we have at least 2 mineralized phases, probably 3, because we see them cross-cutting each other. There is deformation happen over 20 million years, so it's a long time for all that hydrothermal system that was going on. So we know that we have several phases cross-cutting each other. And we see that some are related to sphalerite, so we're not able to see the silver when it's associated with sphalerite, but in other cases we do see some pure silver mineralization. So it depends on which phases we're talking about, but in some area we have high grade numbers that are related to sphalerite and other that are really pure free silver minerals.
Is there any scope for picking or sorting with some of the previous tailings? Does that give you any chance to get any access to high grade ore?
maybe on the Nigadu deposit, which is on the east side of our project, probably the one that is the closer, the historical mine that is the closest from our project, and it's probably the same type of epithermal. We didn't ask for to have access to that. It's a good question, actually. We will see if that's feasible.
Brilliant.
Perfect. Great job. Thank you so much for that presentation.
Thank you.
We are going to move on right now to our third presenter. This is Richard Williams, CEO and Director of Windshear Metals. Now, Richard, take it away until you see me pop back up at the 20-second mark, and then I'll take it away.
Okay. Oh, there's my presentation. Let me just get this going here. Okay. Thank you, everybody. And it's an interesting title for presentation, but I think in our business, especially at the early stage of mineral exploration and discovery, it's really important to explore for and find large deposits, not only for your investors and shareholders, but also for potential acquirers. And for that alone, I think size is very important. So I'm Richard Williams. I'm the CEO of Windshear. I was the founder of this company way back in 2004. We've evolved a lot over time, and these are some new projects that we've picked up over the last 2 years. So the philosophy of the company, I think right now is, to make a big discovery, you've got to think big. And I think to do that, you need a large land package. And also you need to focus and make sure that you put as much money in the ground as possible. Exploration is an expensive game. And that's really the way we operate this company. We have 2 projects. In Scotland, we've got a nickel, copper, cobalt project that was discovered in the 1970s by Rio Tinto and Gold Fields. We won't be talking about that today. Instead, we'll be focusing on our 360 square kilometer Thunder Bay Gold Project located in northwestern Ontario. So why are we focused in this area? Well, there's been a lot of activity in the belt of late. And I think if you look in the far west part of the Shibando and Greenstone belt, you've got Gold X2 with a new resource that came out, almost 5 million ounces inferred, 1.2 million ounces indicated. And as a result of that, we saw an investment earlier this year from Anglo Gold and somebody called Hess, totaling $115 million. And I think that really opened up the eyes to investors and participants into the potential to find large-scale gold deposits in this belt. Further to the east of Gold X2, you've got Delta Gold's project. It doesn't have a mineral resource estimate yet, but all indications are that it could be at least a couple of million ounces. And then getting closer to Thunder Bay, you've got the Tower Mountain Thunder Gold project, which is now closing in on 3.5 million ounces combined, indicated, inferred. Our project is at the east end of the belt, and remarkably, even though it's right on the doorstep of Thunder Bay, it's received very little in the way of historic mineral exploration. So one of the systems that we use to explore for gold in this part of the world is till sampling. Obviously, it's been glaciated in the past. And what this image shows us is some data from the Ontario Geological Survey, where they covered the western part of the belt. And anything indicated in pink here would be gold in till over 5 ppb. And you might consider that to be a fairly low-level response. But clearly, when you track that back to the known gold occurrences from west to east, you've got the Moss deposit in the far left of this image. Then you've got East Coldstream, Pistol Lake, Bando, the Eureka deposit, and the Tower deposit. They've all been picked up by till sampling for gold. And remarkably, even though we're on the doorstep of Thunder Bay just to the east of the city, that area was not covered by the OGS in his till sampling program. So we did it last year, and this is the result we had. It's arguably the biggest gold in till anomaly in the belt. Along the southern margin of our project area, we have gold in till anomalies that cover pretty much a 30-kilometer distance. And also importantly, some of those till anomalies follow the cross-cutting structures that link the 2 bounding structures of the belt.
Richard, we're going to have to stop you there to keep on time here. I'm going to have to throw this over to the judges now. And it sounds interesting. Gervais, we're going to start with you on this one.
in this area?
Yeah, are you there, Gervais?
Sorry, can you not hear me?
Yep, you're loud and clear now. The floor is yours.
Okay, I was going to ask about the previous drilling in the area, whether there's any holes been done in the area, whether there's been any previous mining, surface mining, or any artisanal mining in the area.
So the reason we acquired the project is one of the prospectors locally had found an area which was described in the late 1970s by Noranda as having narrow high-grade quartz veins over an 8-kilometer strike length. Average grades from the veins were around 20 grams per ton, never drilled. So he had staked the western part of the project area. And what really attracted me was that as you go further east, you see these large intrusives. Clearly, they demonstrate a lot of extension, rotation, structural preparation for gold mineralization. But there's literally no drilling done in the whole area over that 40-kilometer strike length of the Archean greenstone belt.
And you haven't been able to do just a single hole, even for a few meters down, just to get a bit of.
So what we did last year was till sampling and soil sampling. We found a 6-kilometer long gold in soil anomaly at what we call inflection, and a 4-kilometer long gold in soil anomaly at the far east end at El Dorado, where there was outcropping mineralization on the edge of the Trans-Canada Highway that assayed up to 30 grams per ton, but again, never drilled.
And have you done any trial pits? Have you gone down a couple of meters just to have a look?
It's a brand new project. We picked it up last year. This year's program, we're going to do soil sampling over a 30-kilometer strike length of the belt, because we have gold in till literally over the entire 30-kilometer section. We've staked additional land at the north end of the belt where there's a big regional break. Again, new gold anomalies, new discovery right on the doorstep of Thunder Bay.
At least you've got an outcrop. That's a good start, isn't it?
Yeah. And what I should point out here as well is that the studies of the glaciation in the area show that the transport distance from bedrock source to where the gold and till anomalies are is typically less than a kilometer, normally around 500 meters.
Okay.
All right, let's flip this over to you, Ellen. You're up.
I'm very familiar with the Gold X2 story, and I love their deposit. So can you tell us when the stake? When did you start staking this land, and what is your program for the next 12 months, and how much cash will you need?
So we started staking last year in May, June. All of that land, 360 square kilometers, was available for staking. It surprised a lot of people, to be honest with you, who live in Thunder Bay and who have driven up and down the Trans-Canada Highway and didn't realize that that potential existed. This year's program, as I said, will cover about a 30-kilometer section with soil sampling on the southern margin of the project. In the north, we've got a smaller soil sampling program at what we call the Kingfisher target, as well as new till sampling on some new ground we staked. We've just completed an airborne drone magnetic survey. So the budget for this year is $400,000. So you can get a lot done for $400,000. Again, one of the attractions here is that we don't have to build a camp. We don't have to supply food. We don't have to fly people in and out. So most of the money goes into sample collection, field observations, and project advancement.
All right, great question. And
sorry, Lindsay, one more question. The last financing you did it. What was the size and the price, please?
We raised $2.5 million at 10 cents earlier this year, with a half warrant at 20 cents. The half warrant is valid for 3 years.
Thank you.
Perfect. Miranda, why don't you finish us off here?
Thank you. Thanks, Richard. This is you said this is a new opportunity. What is the sort of First Nations sort of community impact work? Like, do you have to, for exploration, and as you continue to evolve this project, will you need to look at agreements with the local First Nations?
Yeah, that's part of the program. We've already engaged and had initial discussions with the relevant First Nations bands. They've been very positive, and I think they like the opportunity to see something so close to Thunder Bay. And certainly one of the more prominent bands there, they were pretty excited to see something develop right on the outskirts of the city. So, in my experience, I think obviously engagement, good communication, just to make sure that everybody understands what we're doing, when we're doing it, and what the impact might be, and also to open up employment opportunities and training opportunities for everybody in the region.
Super. Thank you.
Well, that one we'll wrap up that for you, Richard. Thank you so much for presenting for us, and good luck with those tough judges. I tell you, they're ones to really watch. Our next and final presenter is Olivier Casa-Laponte, and I'm pretty sure I've completely mispronounced your name, so my biggest apologies. This is the Vice President and Head of Investor Relations for PMET Resources. Olivier, great to have you here. The screen is all yours. Again, I'm going to jump on at the 20-second mark to let you know that you have 20 seconds left.
Thank you very much, and no problem with the name pronunciation. Not the easiest one, so all good. Good afternoon, everybody. So if I ask you basically to name a few, the next major lithium mine, you could probably name a few companies, that could come to mind. However, in the lithium world, very few have the combination of grade and scale that PMET would offer. And especially when you consider the cesium and tantalum byproducts that we could potentially have, none of them have the kind of resource and scale of those two byproducts here. As a PMET shareholder, that's what you get. Our flagship project called Sheki-Chouanen is located in Quebec. It was initially discovered as because of the lithium. And today, it's already the largest hard rock lithium reserve in the Americas and a top 10 global resource for lithium. That attracted some very important strategic shareholders like Volkswagen, and in 2024 and Albemarle 2023, which allowed us to advance the project towards development. We have $173 million of cash on the balance sheet currently, and a fantastic management team to lead us. What makes us truly different from a geological side is really what lies alongside the lithium. A lot of investors understand the lithium opportunity. Very few understand the cesium and tantalum opportunities. So cesium is, one of the rarest industrial metals on Earth, critical for high pressure, high temperature drilling fluids used in offshore oil and gas, as well as emerging applications in healthcare and the new generation of solar panels. And today, global production is extremely limited and controlled by China via two operations. PMET has 12 times the size of the previously largest cesium resource. So we have an opportunity here to completely reshape that supply picture in the future. On the tantalum side, very similar story. 65% of supply comes from the DRC and Rwanda, the Kivu Lake region. It's essential for electronics, aerospace. It's in every NVIDIA chips. Demand continues to grow at a multiple of GDP, and reliable sources are really hard to find. All three minerals occur within the same mineralization system. We can extract the three of them with very simple DMS processes. So no chemical, no flotation, cheap and easy to move towards production. It could become very valuable co-products that improve project economics, and while providing exposure to shareholders with entirely different critical minerals market. Over the past few years, we've moved from exploration and towards a feasibility study in October 25. And in less than 4 years, we've attracted relationships with Mitsui, Primero, Coke, and Volkswagen and Albemarle. And we're actively engaging with end users across the supply chain. So by being a PMET shareholder, you gain exposure to a globally significant lithium project with a potential huge upside from two strategically important critical minerals. All of this located in Quebec, a jurisdiction that's globally recognized for political stability and good permitting framework, and renewable power, and federal and provincial governments which support critical minerals. So at PMET, we believe that we're definitely building one of the world's most strategically important critical minerals projects. Thank you, and I look forward for your questions.
Well done. Take a bow. Thank you so much. And, now we're going to just pass that right over to the judges. Miranda, why don't we start with you?
Thank you, Olivier. That very interesting. I obviously know a little bit about lithium, but cesium and tantalum, that could become a sort of a key strategic leverage point for you. Can you just walk us through you've got 173 million in cash, if I understood correctly. What are your next steps? Like, what are do you construct? Is there a special, you said there's no special processes, but just sort of walk us through the next phases of actually getting this metal, the mineral out of the ground.
Yep. So in Quebec, what you need to get a permit, like a mining permit in operation, you need a feasibility study and ESIA, which combined go into a permitting process. For speed to permit or speed to market, basically, we chose to focus the feasibility study that we published in October 2025 solely on one area of our trend, which hosts a whole lot of lithium, and only on lithium. Now, in the background, knowing all about the tantalum and the cesium that we found, while the government and the First Nations are opining on our project from a permitting perspective, we are doing the work in the background to eventually improve the quality of the economics. And what we're doing is, on a feasibility study level of economics, we're adding the tantalum at CV5, which is one part of our ore body. So we're going to have lithium and tantalum. And we're also having a look to completely flush out all the economic potential via PEA level of economic assessment or knowledge on the two key areas of our project, namely CV5 and CV13, and with all three critical minerals. So there at the PEA level, we'll have like a real flushed out potential economically of the project. This will be released in Q4 this year, and we're very much looking forward to publish that in Q4. And these core products could eventually be an amendment to the core permit of mining that is going to be given to us for lithium, for example. So that's our strategy. So we're funded with 173 all the way to FID, which we expect to be late 27, FID shortly after that, basically. And that money allows us to do more exploration and to do more development, detail engineering, for example, updated feasibility study, and all the costs required to that to get in the position to make an FID as soon as we get the permit.
Perfect.
Super, thank you.
Alain, why don't we flip to you?
Can you give us the top metrics of that feasibility study, pre-feas, the 2025, please?
Yeah, absolutely. So roughly 20-year mine life, 800,000 tons of spodumene, which in the lithium world is quite a large operation. It would be like the 5th largest mine in the world if you by the time we turn it on full production. It's going to be 2 phases of 400,000, one phase being underground and one phase being open pit. All-in sustaining costs just shy of $600, so $597 US to be precise. That compares to roughly $2,200 for lithium currently on an SC 6% basis. So very interesting economics. The NPV and IR were done in October 2025, and we're talking a really different lithium market back then. So we did them pretty conservatively at 1332, and that gave us an NPV of 1.6 billion, IR of 18%, just shy of 5-year payback. If you start,
sorry, what's the payback? How many years for the payback?
4.7.
Okay.
That was at almost half of the current lithium prices, right? So as you might imagine, there's quite a bit of a sensitivity there. Give or take $450 million of on the SC6 basis, $400 million of NPV delta per $100 of spodumene price, right? So roughly you're looking at almost $1 billion, almost $4 billion more of NPV from October 25 to currently. So so it's just something to keep in mind. I think the key important metrics there, Anna, is basically where we hit in the lows of the current cycle for spodumene were $610 in terms of pricing for the commodity, and we would be producing all-in sustaining costs below that. So as an outsider, that's why Volkswagen, you know, has an offtake with us via their PowerCo subsidiaries, because there's very few projects that would be able to operate on a free cash flow basis, you know, from throughout the cycles for a very long period of time, and PMET, you know, checks those boxes.
Perfect. Julien, why don't you finish us off here?
So I wanted to talk about the concentrates and getting them refined. What are your plans? I mean, a lot of the refineries are actually in China, even including lithium. You know, so the question is how you're going to resolve that issue.
Well, so that's what having a big project with, you know, a long mine life allows is, and that's why the conversations we've had ongoing for years now with strategic partners and potential, you know, offtake partners or downstream operators. That's why those conversations are happening, you know, on an ongoing basis, is because we're finally able to offer to North American companies an ability to backstop their, you know, multi-billion-dollar capex plan on the downstream side with a project that can have visibility for 2 decades plus in terms of production at competitive prices. So you're absolutely right that currently, as it stands, you know, 80+% of the transformation or refining is done in China. And what we are hoping to do with the project is to kickstart, you know, the fundamental change needed to completely, you know, change the supply chain basically, and have opportunities in Europe and have opportunities in North America. But for that, you need the big projects, and we didn't have the big projects in Quebec or Canada or even North America for the longest time. And finally, PMET, you know, with Shaki is one of the rare ones that can offer that. As it stands, if we need to send it, you know, a part or all the production at first to China for refining, then we'll, you know, our all-in sustaining costs are baking in all the way to deepwater port, right? So you just need to adjust for a part of the costs for the shipping on boats. You know, something that, for example, Champion Iron Ore is doing in Quebec, right, with its iron ore production of around 50 million tons a year. So definitely not something that's impossible to do. It's added costs, but we think we have a chance to really underpin an emerging supply chain within a North American / European construct.
I mean, I was going to follow up because, I mean, you talk mainly about the lithium, but I mean, tantalum is, I mean, it's almost always obviously refined in China at the moment. So that's quite a big capex for a new plant for rare earths. And when you think about cesium, I just don't know about refinery of cesium, but can you say a bit more about that?
Yeah, well, on the tantalum side, we actually have quite a few companies that are non-Chinese that are involved.
Okay.
Yeah, so North America, Europe, Japan. So not as concentrated as lithium, Gervais. So which is good news. The problem with the tantalum is really the concentration on the production side, which is, you know, conflict-ridden and human rights issues and environmental issues, which is really, like, we're offering a solution there. On the cesium front, some of the transformations happening in China, some of it is actually happening at site at Tenko in Manitoba, where Sinomine owns the only primary source of cesium currently. So that one has piqued a lot of interest from different parties, because we could break a current monopoly on cesium by the side of the resource that we have. So that one is, you know, an open field basically on what can happen with the cesium. The volumes are much smaller than the lithium, so, you know, capex plan for downstream would definitely be not the same scale, right? Like, you'd remove zeros probably in terms of cost, because the handling of the product is much smaller. So it could make for really interesting economics for both us and whoever, you know, operates in the downstream. But yeah, cesium is really, really exciting and interesting. And, you know, a lot of people are worried about, you know, well, if you put a whole lot of production in, you know, online, then you're going to demolish the price because the supply spikes up. what we see the other way around. All the channel checks we've done in the industry are actually saying, yeah, if you produce it, we'll use it, and we'll use a whole lot more of it. So there's a few demand pods there that are really just truly waiting for an additional supply source. And we have strong conviction that we can solve that with our resource.
Perfect.
Thank
Let's
you so
wrap
much.
it up there for sure. And judges, we're going to excuse you for the next 3 minutes as you deliberate together and come back and tell us who the winner is. And for our 4 wonderful presenters, I'd like to call you all back onto the screen. And this is where we all get to twirl our thumbs with me with high anticipation on the final outcome. So during that time, we're going to play a little fun game together. And the game is called Mine or Myth. I'm going to read a statement, and all you have to simply do is tell us whether it's true or false. Okay? Here we go. Number 1, we're going to start with you, Olivier. You can answer this one, and then we can go around. Gold is edible. True or false?
Well, if you believe the Instagram posts of like those turkey steak, it looks like it's edible and expensive to eat. But I'm just a finance guy, so like, yeah, I'll just go with my Instagram knowledge, I guess.
Okay, Instagram. I mean, if it's not on Instagram, it's not real. I mean, let's be honest here, right?
Let's be honest.
Okay, do we all agree? Is it true or false?
If you ask a geologist, everything is eatable.
There we go. Well, you're right. It's true. Gold leaf is actually used in food. Okay. Number 2, diamonds are made from compressed coal. So, Michael, why don't we start with you on this one?
Let's say yes.
You think so?
Carbon, isn't
Okay.
it? Yeah. Coal,
Okay.
carbon. Yeah.
Okay. Do you have a reason behind it?
Well, I think I saw a Superman movie and he had a
Yeah.
hunk of coal squished into a diamond ring and gave it to Louise. So for
It's
Lois.
gotta be it then.
Yeah.
Anybody disagree with that?
I agree.
You agree? Okay. Well, it is false. They form much deeper in the mantle, not from coal.
Mm.
Okay. Number 3, Chile is the world's largest copper producer. True or false? Richard, you give us your first answer.
I'm going to say true.
True. Okay. Anybody else?
I don't know.
All right. True it is. True is right.
All right, Richard.
Good job, Richard. Okay, last question. A geologist's hammer has a pointy end for opening beer bottles. True or false? Olivia, you can finish this one. Actually, Julian,
All I know
you-
is that geos that I know are very thirsty. That's all I know. So.
I've seen many beer cans open with the pointy end of the hammer.
so we're all
It's always a matter of thinking out of the box. Nah? You can use this tool any way you want.
okay. What is the final answer? The final answer is true. Pretty much anything can open to open a bottle. That's for sure. Okay, so I think that we have to wrap up the judges part. Judges, are you here with us?
I am, but I never actually disappeared. I was with
Yeah,
you all the way through.
Me neither. Wait, I don't know where we never disappeared out of this, so we didn't have an opportunity.
We found out whether gold was edible or not.
I mean, the joys of television, it's smoke and mirrors, really, right? So I guess you 3 have not had a chance to just digress and come together yet. You may have to take that over right maybe to the...
Or we can just vote. I mean, we can just vote. I mean, I can vote.
we can do that.
Yeah.
Absolutely.
Yeah.
Yeah, we can take a vote.
Public vote. The shame of getting it right or wrong.
Okay. Okay. So first up then, we are going to do Michael with RPX. Are we in?
What do you want me to do? Yes, I'm voting for Michael.
RPX?
Yep.
Yes.
Yeah.
RPX.
Yes. That was my vote as well.
Okay.
Yeah.
So RPX.
Yeah.
That's it. Well done, Michael.
Yeah, that's
There we
it.
go.
It just,
Okay. We're not even going through the other ones. We have a winner. It's RPX.
it's unanimous.
All right.
Yeah.
Congratulations.
Take my rock hammer and open my beer with it.
with one caveat that we need to do some more homework.
That's right. We need to do some more
Yes,
homework.
that's a good caveat, Ella.
Oh my gosh. Okay. So, I'm just going to take a moment here and just say thank you to each and every one of you. You did the hardest job. You came onto the screen with, how many people that could be watching this and really gave your pitch for 3 minutes. I mean, that's really, really hard to do. Thank you to our amazing judges as well for being so attentive and just really so hard on that. That's really great. So, that's it. That's the fun round of the pitch battle online right here with Minds and Money's Online Connect. And for all of you tuning in, don't forget to tune again tomorrow at what time? 4 p.m. Melbourne time for the next round of pitch battle. Thank you again to everyone.
Well done, Lindsay. I think you did it very well.
Thank you.
Thanks, everyone.
Thank you
Thanks,
very much.
Lindsay. Great job,
Thank you.
everyone.
Well done.
Thank you.
Yeah.
Okay.
Thank you very much.
Bye-bye.